Hello, welcome. My name is Arnold Atwebembire, an investment associate here at Cornerstone Asset Managers, and welcome you to our weekly market review. I'm joined by
Robinson Sentongo, Senior Associate, Cornerstone Asset Managers.
Quite a lot has been really happening in our economy. First and foremost, the Treasury bond auction that happened, and also the Monetary Policy Committee read the Monetary Policy Statement for May, and those are the things that really shape the economy, how the economy performs. We also saw Minister of Finance releasing the performance of the economy for April. Quite a lot really took place in the week. So can you really unpack for us what happened in the Treasury bond auction?
Yeah, thank you, Arnold.
Did you participate?
No, we didn't participate in this one.
Yeah.
There was an auction this month, as you said, but interestingly, we saw the yields, especially on the 15-year bond, we saw that the yield stayed the same as it was in the previous auction. And then for the other two bonds, the 2-year bond and the 5-year bond, we saw that the yield dropped by about 0.5% on each of them. Yeah. And for the 15-year bond, it stayed at 15.75, where it was last time.
Yes.
And looking at the results here, I can clearly see that government wanted to borrow 250 billion on the 2-year bond, and at the same time borrow 350 billion on the 5-year bond. But we can see that what was accepted was very, very, very close to these amounts. Actually, for the 2-year bond, government accepted about 331 billion, even more than the 250 that they wanted.
Yes.
And then on the 5-year bond, they accepted 308 billion, which is close to the 350 that they wanted. When you look at these two acceptance levels compared to the longer term bond, the 15-year, you can clearly see that even though government wanted 450 billion on the 15-year bond, they accepted about only 256, which is much lower than the 2-year bond and the 5-year bond.
Yes.
So for me, this signals that the investors are more confident in the shorter term. Because now you see if government is willing to actually even accept bids more than what they had tendered, it shows that the shorter term outlook is more certain for the investors. Of course, amidst all that is going on, the conflict in the Middle East, which is affecting prices, fuel prices, transportation costs, and we see that we're in a period where investors are anticipating high inflation, or are expecting higher inflation in the longer term.
Could that be the reason why they locked their money into shorter tenor like 2-year bond?
Yes, exactly. So it could be the reason why they locked their money into the shorter term tenors, 2 years and 5 years.
Yes.
Because now for the 15-year bond, they are a bit uncertain about the longer term outlook, expecting higher inflation in there.
Yes.
So yeah, I found that very, very interesting, and yeah, maybe that also sums up that auction. But then interestingly, as you said, there was a Monetary Policy Committee this week.
Yes.
Yeah, what happened? Tell us.
Thank you for the breakdown. For the bond auction, the Monetary Policy Committee read the Monetary Policy Statement for May, and this time they maintained the CBL, central bank rate, at 9.75, but on the other hand, they increased the cash reserve requirement. So what does this mean? Of course, the Governor Bank of Uganda assured that the inflation is manageable. That's why they didn't rush to increase the CBL, because if they had increased the CBL, it was going to increase the cost of borrowing, since CBL deals with cost of money. But on the other side, this time the Monetary Policy Committee decided to use a tool, which is cash reserve requirement, and they increased it from 9.5 to 11%. What the effect of this, of course, for it works with the liquidity. It works with amount of money that is in circulation. So since they increased that, of course, we shall see more banks locking their reserves with the central bank, which will make banks remain with less money, of course, and it will end up making lending less because the banks have less money.
Yes, so an increase in the cash reserve requirement, as you've mentioned, is also good news for the investors, because this usually signals higher yields in the market. if there is less cash available for the banks to lend,
Yes.
of course there's going to be less liquidity in the financial system. So the demand for bonds will become more selective.
Yeah.
We see that Treasury Bill yields will be more elevated. Medium and long-term yields on the bonds will be also higher.
Yeah.
And we are most likely to see even a more steepening yield curve. And this increase in the yields is not going to be immediate. It will take some time. But let's see how that plays out. And we have an auction next month where we are going to be monitoring and see how it plays out. Thank you for listening to us. See you next time.